G'day. It's Stefan Angelini from Angel Advisory. Thanks for joining me for another economic wrap. It's the 21st of July. Let's hope it's a good one. Today, we are going through the recession in Australia and what this fund manager says that what percentage chance there is of there being a recession in Australia. We're going to talk about easing rentals and why CoreLogic think that the rental crisis is going to be easing on Australians. And in juxtaposition to that, we're going to talk about Sydney's housing and how Sydney is falling behind the race to build housing to meet the population growth. And then we're going to focus on the UK inflation, how there's been a bit of an easing in UK inflation. It's not as bad as people thought. And then finally, we're going to look at self-driving cars and how Tesla is leading the charge on self-driving cars and why you might see this stock drive even further. Now, that's it for today. If you're going to stay on the line, please remember one little thing. This is all just general information. Please don't consider it as personal advice. And if you want any personal advice, please go and consult your licensed financial advisor. If you're staying on the line, let's get into it. So, stage one. What is the chance of Australia entering a recession? So this fund manager actually says that Australia only has a 20% chance of going into a recession within the next 12 months. That's pretty good, considering there was a lot of chatter around Australia going deeper into a recession and things getting to be really bad. That has allowed our stock market to get stronger and stronger over the next little while. The stock market is a future indicator, if I haven't explained it before, of what we expect the economy to do and how well we see Australia to perform. Given we see interest rates peaking, unemployment still low, inflation starting to ease, they're all good indicators that the economy is getting better and that it may not enter a recession. So what they're seeing is that with high levels of migration, they expect that to increase demand for goods and services and to decrease the cost of labor, which will allow our economy to continue to go stronger and stronger. But also, this fund manager says that commodity markets on the back of China reopening and China's increased demand for our commodities will hopefully keep our economy afloat for longer than anticipated. And that means we might just skate through without having a recession. So a 20% chance of going into recession is pretty good. I'll take those odds. Next up, let's go into talking about the rental crisis that's on us all. And how CoreLogic, being one of Australia's largest, economic forecasters in terms of the property market especially, see the rental crisis or rental growth easing from 2024 onwards, especially as the RBA increased their rates. Now, let's just look at where we've come from. Over the last 24 months to May 2023, over the last 12 months to May 2023, rent prices have gone up by 6.3% in those 12 months. And that was up from 6.1% to April. So it's still growing. It's higher amongst new dwellings, being 8.3% in the last 12 months to May. However, this is nothing compared to the year before. So in the 12 months leading into July 2022, rental prices increased by an average 21.7%, which is huge. So if this keeps going at the rate it is, it's going to be so unaffordable for so many Australians to actually afford a rental. So let's look at what CoreLogic are looking at. So CoreLogic is a large property research firm which they're exploring the correlation between higher interest rates and higher rents. And they're saying that because interest rates are high, they're indicating that rental growth will ease or loosen from 2024 onwards. The reason they're saying is because of higher rental growth. It's not solely due to the rising interest rates, but it's a large indicator. And there's other factors that are playing into why rents will ease, which I'll go through in a little bit. So what they're saying is that, did you know, here's a little fact, that the ATO data has said that 47.1% of property investors in Australia were negatively geared in the year 2020 to 2021. So that's not including the most recent interest rate increases. So you can imagine a lot more Australians will be negatively geared based on their property portfolio. But let's look at the reasons that CoreLogic had forecasted rent growth will ease in 2024. Number one, renters may return to share housing again. And this is a big area that I'm seeing and I'm really focusing on, because renting is basically less affordable, and they need to live in a share house because it's the only thing that will work for them. Number two, easing construction costs and fewer approvals may ease conditions in the building sector, and therefore make more residential dwellings come on the market faster than anticipated. There may be an increasing in rental supply with social and community housing initiatives from government on top of the build-to-rent projects, but As I've indicated before, build to rent is falling way behind where it should be, and social housing is taking longer. But social housing only impacts a part of the market that is the lower end of the market. So there's a big gap for people that might have to shift into that share housing or rooming housing. And then finally, more investors are returning to the housing market in stronger numbers. So that will mean more housing supply with people buying more properties. So let's cross our fingers to ensure that the rental crisis does get a bit easier. Let's move on to Sydney's housing. So Sydney's housing is growing at the slowest pace compared to all states around Australia. Now, it's fallen behind other states addressing their housing shortage. And basically, they're only building 5 new dwellings for every 1,000 residents every year. That's a huge shortage. Now, look, Queensland and Victoria are behind too, but they're still building 8 or 9 new dwellings per 1,000 residents a year. So huge shortage. As you can see, it's going to cause massive issues on the housing market, rental, and for capital prices, for actual housing prices. But New South Wales needs 85,000, or they anticipate they're going to need 85,000 additional houses for people over the next 20 years at least, because their population is tipped to reach 6.1 million people throughout Greater Sydney. So they're going to need more infrastructure, more housing, and they're just falling way behind. Earlier this month, figures showed Sydney had overtaken Canberra as the most expensive capital city to rent a house in. Canberra is super expensive because a lot of people want to live there, not a lot of houses. But the median rental price for a home in Sydney ballooned to $700 per week, according to the Domain Quarterly Report. Melbourne is still at average price $520 a week, Brisbane at $580 a week. So a lot more affordable in these two cities. And that's why the population growth within Melbourne and Brisbane is a lot faster than Sydney, just because it's affordable. Finally, let's go into UK inflation. The UK have had a hard time. And it's hard for people to live there right now because the cost of energy, cost of gas, cost of electricity is through the roof, as well as the interest rates gone up really high. But finally, they've seen inflation not meeting target and actually being providing a better figure than the target. So it has fallen by more than anticipated. And it's now at a 15-month low, their inflation rate. People over there are doing it extremely tough. So hopefully that continues on and keeps getting better. Finally, on a good note, self-driving cars. Tesla is leading the charge. Elon Musk, how you going? Doing great stuff. Basically, they've nearly got their self-driverless cars coming to market. Shares recently were down a little bit because it got lower profit margins, but hey, they're putting a lot into research and development. But the article here that I'm reading says that they are in discussions with a licensing provider to allow them to license their driverless cars to give them access to roads. So if Tesla can do this and lead the charge and basically change the way cars are driven forever, that's going to be huge. And it's going to be great for their stock price if this actually gets through. So watch that space. That's it for me. Thanks a lot for listening. I really appreciate you taking the time. If you've got any questions, reach out to hello@angeladvisory.com.au. If not, happy investing. Enjoy your weekend. Speak to you soon. Bye.